Thoughts and welcome to this end of week market commentary for Friday the 9th of August, incorporating the weekend of the 10th and the 11th for all of those crypto traders amongst you. We have come to the end of what has been a very volatile week for FX, particularly equities and also commodities. Continued stalemate between the US and China on trade negotiations has caused much angst in the global financial markets. The rate cut in the US has traders confused as to whether it will be a one and done or if there are any more on the way. And then there was the question of Federal Reserve independence. Are they being unfairly influenced by President Trump, and are they sending mixed signals about future intentions? And of course, the Fed is not the only central bank cutting interest rates. New Zealand cut earlier in the week by a surprise 50 basis points. And made it clear that more cuts can be expected. And China themselves chose to allow the Chinese renminbi to depreciate under the 7 level in a veiled response to an increase in US trade tariffs, provoking further stern words from the US administration. Gold has benefited from not only the general uncertainty, but also the drop in bond yields hitting a 6-year high of 1510. And of course, global stock markets have become the poster child for a roller coaster volatility, with the Dow Jones on Wednesday reversing a 600-point drop to close flat on the day. For once, crypto has been a vision of stability, showing some gradual gains as other asset markets melted down, but technical resistance has seen the major coins stall, although no major reversal quite yet. But Bitcoin certainly struggling to hold any gains above 12,000, and the 237 level in ETH certainly providing some stiff resistance. So Friday, what happened? Well, Friday would see a pullback for equity markets from the gains made on Thursday. The DAX and NASDAQ were both closed over 1% lower. The Dow Jones lower by 0.34%. In the FX markets, all eyes turned to sterling, with a plethora of UK data being released. Industrial production, GBP, manufacturing production and construction output all came in worse than the market was expecting. The only bright spot was a better than expected trade deficit. Sterling dropped initially from 121.20 down to 120.85, which was the low from earlier in the week. But in the end, the weight of poor data and a continuing Brexit impasse was too much to bear. And sterling dropped to a low of around 120.24, which is pretty much where it closed on Friday. Canadian employment data was also released, which showed a decrease in jobs and a surprise rise in the unemployment rate. Dollar CAD initially rallied, as you would probably expect, from 132.10 to 132.70, but rather surprisingly fell back to close near 132.15. Euro dollar continued its love affair with 112, trading either side of that level by around 20 points in rather directionless trading. The sell-off in stocks weighed on dollar yen, taking us back below 106 to close at 105.65, and Aussie also suffered from the general risk-off sentiment, slipping back below 68 cents then to a close of 0.6785. Crypto saw one of its quieter weekends in quite a while, although Bitcoin did dip down to 11,400, while ETH actually bounced up to 215. For those of you who have been watching closely, the BTC dominance has been increasing quite significantly over the past couple of weeks, and maybe some light profit taking on that particular trade over the weekend. Turning just quickly to a little bit of a technical view, you'll see up in front of me here, I have a sterling US chart, actually a monthly chart, really going back as far as my charts allow me, which is only back to 2007, but you'll get the picture from this. As you can see, we close here 120.35, and we have this last line of support here, 119.86. The point really here is we are that close to pretty much the low in the last, well, I don't know how many years, at least 12 according to my chart, but more than that if you have data which goes back that far. There is a little bit of as I've touched on before, a little bit of contention as to what the low was in 2017, as there was a bit of a flash crash during one Asian session where Some lower lows may have been recorded, but for the purpose of what I'm looking at here, we're going to go with 119.85. It's pretty simple. The poor data coming out of the UK showing, where the UK economy is right now and the different factors weighing on it, and obviously the potential for a no-deal Brexit. It could be a bit of a disaster waiting to happen with sterling, with no meaningful support, technically speaking, to the downside. Of course, there's nothing to say that the Bank of England won't decide at some point that they need to cut interest rates as well, which will only weigh on sterling further. So keep a very, very close eye on that level for this week. It will certainly be a very interesting one. I hope everybody had a great weekend, and I look forward to talking with you during the week. Cheers.